Between FDIC insured deposit accounts and a few of what I'll say are somewhat conservative investments, there are some great options when it comes to earning returns with lower risks. In this episode, I'm going to tell you about 7 of what I consider are the best low risk investments in 2021 for people over 50. But before I do that, I just want to mention that what I'm doing is giving you an outline of things that I've learned over decades. I'm also giving you information that I've actually researched. And at any point, I will mention, any point in the video, I'm going to mention where I got the information from. But if I do forget to mention it, I will try to put a link to that information, to those sources in the description box so you can check it out for yourself. Welcome back to Over 50 TV, where we provide essential work and money tips for people over 50. My name is Lou Reyes. Well, before the break, I told you I'd outlined 7 of what I consider are the best low-risk investments in 2021 for people over 50. I'm going to start with investment option number 1, online high-yield savings accounts. Online high-yield savings accounts are, in my opinion, they're a good place to store your emergency funds and to save up for large purchases or maybe even some other short-term financial goal. Now, while not usually thought of as an investment vehicle, these type of accounts, they do pay a yield that's a bit higher than a regular savings account. Now, some of the things that I like about this type of an account is this. Number 1 is your money is accessible when you need it. And the best online savings accounts, what they do is they don't come with a monthly fee or they don't come with a minimum balance requirement. They are also low risk because, as you can guess, the government, the U.S. government, insures them up to $250,000. Now, a few things I don't like about high-yield savings accounts is this. Number 1, the rates are variable, and they do fluctuate, and they can fluctuate, so don't expect that rate that first attracted you to open an account. One of these accounts is going to remain in place forever. Now, another slight turnoff is there is a federal withdrawal limit on the online savings accounts that restricts the number of times each month, every month, you can access your account. But the bottom line is this. If you're looking for a safe place to store your money, other than let's just say in a shoebox underneath your bed, these type of accounts, online savings accounts, are a decent option. Now, if you want to learn more about an account like this, what I'm going to do later on is I'll take a deeper look in some future upcoming video, I'll take a deeper look. But for now, you're going to find in the description box, you'll find a link that lists the best online savings accounts of 2021, and that list was published by Forbes.com. Certificates of deposit. So what is a certificate of deposit, or a CD as they are commonly called? Well, Investopedia.com offered a very good and I think a succinct definition of this investment option. Here's what they say. A certificate of deposit is a product offered by banks and credit unions that provides an interest rate premium in exchange for the customer agreeing to leave a lump sum deposit untouched for a predetermined period of time. Very succinct. You know, most consumer financial institutions, they offer CDs, although it is up to each one of them to decide what terms it wants to offer, how much higher their rate will be compared to that bank's savings and money market products, and they decide what penalties they apply for early withdrawals. Now, the downside with CD is if you need to access your cash, you're going to be hit with an early withdrawal penalty. But what makes CDs a low-risk investment is what I like, which is they are FDIC insured, and I don't know about you, but when I go to bed at night, I like to know that my money is safe. Money market accounts. Money market accounts are essentially FDIC-backed savings accounts, but a big difference is that they generally offer higher interest rates, and you're allowed to spend money from your money market account. Now, even though a money market account can feel like a savings account because it offers some of the same benefits, and that includes a debit card and they pay interest on your money, a money market account does or can require a higher minimum deposit than a savings account, and you should expect a limit on the number of transactions that you can make every month or each month. Now, I prefer money market accounts over regular savings accounts any day of the week because the interest rate is a bit higher than on a savings account. I feel better about that. But you also do get the flexibility to spend cash pretty much when and if you need it, provided, of course, you don't exceed the transaction limit. That's really not a problem for me, and I doubt it would be a problem for most of you out there because you probably have other accounts. But money market accounts are a good investment option. Dividend paying stocks. Now, I don't think anyone out there is going to tell you that investing in stocks is as safe as putting your money in online high-interest savings accounts or even in certificates of deposit or buying Treasury notes. But they are generally less risky than high-growth stocks or futures or sometimes even a promissory note. Now, what I like about dividend-paying stocks is that you get consistent income through your dividends, and you can benefit, and we'll cross our fingers, but you can benefit when the stock price appreciates. They are generally perceived as less risky than stocks that don't pay dividends because the companies that issue dividend-paying stocks, well, they tend to be more stable. As Investopedia points out, and this is a good point, they say many dividend-paying stocks are in defensive sectors that can weather economic downturns with reduced volatility. Preferred stocks. You know, I was in high school when I began to learn about investing in the stock market, and I learned this. I learned that if you're disciplined and you stick to the fundamentals, you can and should potentially anyway earn a good return buying and selling stock. But I also know that unforeseen things can happen that can cause your stock to decline in value. Now, a way to mitigate those portfolio losses is to have a diversified investment portfolio. And for me, that includes holding preferred stock. Now, when you buy preferred shares, you're guaranteed regular distributions of dividends at a rate that's guaranteed at the time of issuance. And also, if the company at any point, if they're unable to pay that dividend to you, well, those unpaid dividends are still owed and they can accrue, and that amount must be paid when the company's fortunes improve. Now, preferred stock, it also tends to pay a higher dividend than common stocks, which I like. And of course, those dividends, I want to mention, they do take priority over dividend payments to holders of common stock. Now, Bankrate.com says this. They say preferred stock is like a riskier version of a bond, but it's generally safer than a stock. Treasury bills, notes, and bonds. You know, when you purchase Treasury bills and other government securities, what you're doing is you're essentially loaning the government your money, and they're paying you interest on the money that they borrowed from you. Now, how much they pay you, how much you're going to earn depends on the particular instrument that you buy, and of course, it does depend on the length of the term. Let me give you an example here. Treasury bills, they're short-term government securities, and their maturity date, well, they range from a few days to 52 weeks. Treasury bills are sold at a discount from their face value, and I want to make sure I mention that. And Treasury notes, they're also government securities, and they're issued with maturities of 2, 3, 5, 7, and 10 years, and they pay interest every 6 months. And Treasury bonds, well, they pay interest every 6 months, and they mature in 20 years or 30 years. And if you hold that bond for the full period, you're going to earn the bond's full face value. Now, if you are interested in learning more about government securities, and I've just barely touched the surface, so you might want to check out a link that I'm going to put in the description box. It's a link to Treasury Securities and Programs, which is the government website that I've used whenever I wanted to find out any information about these type of government securities. And I strongly suggest that you check out that website. Last on my list of 7 best low-risk investments in 2021 for people over 50 is corporate bonds. You know, corporate bonds are debt securities that companies sell to raise capital. And there are different types of corporate bonds. And that includes bonds that mature in a short period, and let's just say 5 years or less, or bonds that mature in 5 to 12 years, and bonds that mature in 12 years or more. Now, many corporate bonds, they do trade on the secondary market, and this allows investors to buy and sell them after they've been issued. Now, potentially, an investor who bought a bond can benefit by selling that bond after the price rises, or they can purchase a bond after a price declines and generates a good yield. You know, while bonds are generally thought to be less risky than, let's just say, investing in stocks, they aren't risk-free. And for example, and I mentioned about longer-term bonds, the value of a bond, it can fluctuate as interest rates change. And to minimize that risk, why not select a bond that matures in just a few years? Because as I mentioned, longer-term bonds are more sensitive to interest rate changes. You can also buy a high-quality bond from a financially strong company, or you may decide to invest in a diversified portfolio of these bonds to minimize your risk. Well, that is all I've got for you today, folks. I've just outlined what I consider, and it is an outline, but I do consider these the 7 best low-risk investments in 2021 for people over 50. Now, these 7 investment options that I've outlined, I don't want you to consider or think that these are investment recommendations. These are certainly an outline that I've decided I thought would be a good idea to present to you today. If you do want to look at any of these investments, I put some links in the description box for you to check out. I also know that you should, and I highly, strongly recommend that you do your own research to look at these options and look at options that are best for yourself, for you. And I will ask you one thing, though, I will recommend is to subscribe to our channel. You can do that rather easily by just hitting that little red button. It's underneath your screen. Now, there's also a thumbs up button. If you hit that thumbs up button, that lets me know that you enjoyed watching the video, that you got some value in this video. I will say, too, that if you have any questions, you have any comments, please go ahead and put them in the comments section. Or if you want, you can go ahead and you can just go ahead and email me. Well, as I always say, have a great day, everybody.